Morning, good evening, good afternoon, guys. And we're back with another trade recap breakdown for Friday's November 14th trade. We didn't trade it together. I don't know if you guys was on a chart that day, but I was looking. I executed something and I'm going to just go over the trade. So right at market open, we had liquidity taken, and that immediately set the tone for me to look for longs. After that sweep, I dropped into the 1 minute and a 15-second time frame to look for execution and confirmation. Price was also sitting at the bottom of the channel flow right here. So using the CLM model, put us right in the discount range. So I already knew we were using a discount range just from the daily time frame and looking at price and how it was reacting. So with when liquidity, channel positioning, and discount all lining up with ICT and everything, I put on a lot of contracts. Let me just say that. My session highs and lows, hourly time frame. I get on the computer around 7:30. You guys know this. While that was happening, I was waiting for some type of structure to form going to the upside. 7 o'clock, which put it in a new low from the London. And I always mark the new low with just a basic line. That's just what I do for reference. We still have our parallel channel right here. So this is, to me, a liquidity grab area. That's why I was looking for longs. All right, another low got put in right here. So I marked that up. And at this point, it's 8 o'clock. So I'm looking for liquidity to get swept during market open, which is 9:30. And I'm waiting. So I dropped down to the 5 minute time frame. This is what we're looking at. We got the London low right here. A new low got put in right here, and then another low got put in right here. So I'm looking for price to pass this low to take out liquidity to go higher. I also see a fair value gap. I see a 5 minute fair value gap right here. If this respects this fair value gap, we can go higher from here. However, it's Friday. We know how the market get down on Freaky Fridays. I'm looking for it to take out liquidity down here and then enter. This is 9:30, market open. Price took out that recent low down here. So now I'm looking at the 1 minute time frame. The 1 minute time frame, and I'm also looking at the 15-second time frame on my other monitor. So I'm watching everything. So I'm looking for some type of reversal to happen right now. I notice we have a change in direction, a market structure shift right here at this line. Market structure shift, break of structure. It's a shift. Something's about to change. So then I drop down to the 15-second time frame. This is what we're looking at in the 15-second time frame. I spot a 15-second fair value gap here, which is also in my 5 minute fair value gap. So with that happening, I see a break of structure right here on the 15-second time frame. It's tapping into my 15-second fair value gap. So now I'm looking for longs. This all happened within the 15-second. This was real time. I would have entered right here, 15-second time frame, and I would have entered again at this 15-second fair value gap. Obviously, my entry would have been down here, but we're just watching it. This is the 15-second time frame. On a 1 minute time frame. Now you wouldn't catch this on a 1 minute time frame because this move happens so fast. So that's why it's sometimes great to have that 15-second time frame that you can use on TradingView, because you would not have caught the displacement right here at all looking at the 1 minute time frame. And once I saw price close above this parallel channel, I knew we was going higher. I was very confident in that trade. And I'm gonna show y'all the 5 minute. And price shot through that 5 minute fair value gap we had, closed on top of it heavy. That was even more reasons to go higher. So at this point, I would, y'all know me, I'll probably be taking some off, sell 3 contracts to keep 2 on, and then I will set my stop loss to break even. This is 10 a.m. Normally, 10 a.m. macro, you got a little reversal will happen for a pullback. And I mentioned that Friday that I was looking for a reversal to happen for a pullback to go higher. You got your hourly candle close, because this was like 2 trades in one. You got your hourly candle close, which is at 10 o'clock. You got your 5 minute pull back right here. Let me mark it out so we can make sure we're looking at the same candle. I'll make that purple line. So you want to go down to the 1 minute time frame. Look for a break of structure, fair value gap. My stop loss would be at that previous 5 minute candle low. And my TP would be them session highs that we had marked up. The 5 minute time frame, this what we looking like. So at this point, we're touching the Asian lows right here. So now I'm taking more contracts off and moving to break even. We just passed these London highs right here. And that's TP. Pretty clean, in my opinion. Again, it took out the session lows previously. It made new lows right here. New York Open happened. It took out another low, made a new low, went for the liquidity grab, respected the parallel channel right here, this pink line, and it went to the session highs, all of them. And then we even had another setup right here during this point, during the 10 a.m. macro for the reversal, but it pulled back just to go higher, which I mentioned in Friday Discord what I was looking for. Remember, every day is not a runner like this. When we live traded Thursday, we did not have this great move. It's not like this all the time. So keep studying, keep practicing, and don't let one slow day shake your confidence. We're stacking knowledge and results day by day. And I will see y'all live Tuesday in a Discord. Hopefully we can catch a beautiful move like it did today, because this was amazing. This was just amazing.